Hello and welcome to the latest edition of the Sharesify Midweek podcast. I'm joined as always by James and Steve. How are you, gents?
Very
Very
well.
well.
Another a choppy week this week. We talked recently about the fact we'd had 9 weeks of back-to-back gains. Well, that kind of came to an end last week, and this week, lots of headlines crossing the tapes about Iran and oil prices going back up again. So markets pretty mixed, but Steve, the big story, you can't get away from it, and everybody wants to hear about it. SpaceX IPO. How's it going?
Yeah, I mean, obviously the background noise is going tremendously well. I mean, there's speculation that it's been at least 2 times oversubscribed. Some speculation has suggested it's much bigger than that. So that suggests there's going to be a lot of pent up demand because people won't get their full allocations. That's true for individual investors and institutions. So in the secondary market, once the float goes ahead, which is due on Friday, there should be this ready built up capital pot to throw out the shares on the open market. Now, whether that comes to fruition or not, we will wait and see. One thing that I think is well worth pointing out, though, is just remember there's lock-in arrangements. So you've got lots of venture capital investors already in SpaceX, institutions that were early investors, and founders or staff. And after 90 days to 180 days, the lock-in agreements will be released. So they will be able to sell more shares in the open market. So the next couple of weeks is likely to be fairly volatile for SpaceX, but you're likely to get these more increased liquidity events after 90 days and after 180 days. So you could get a big flood of new stock coming on the market, and that could put a lot of downward pressure on the price if there's not already built demand for those shares. So it's just another factor to think about if you want to participate in this IPO.
Yeah, it's as always with these things, it's supply and demand, isn't it? And as you say, you could see a big overhang. I had a very good chat with George Ferguson, who's Bloomberg Intelligence's senior Aerospace and Defence analyst in New York. It's on the podcast is on our website, so go and have a watch of that. He's the go-to guy at the moment for SpaceX, and I have to say he was cautious. I think is the nicest way to put it about the valuation. He said the lift business, so the satellite launch business, is good, but that's not gonna, the valuation doesn't rest on that. Even the Starlink satellite communications business, which is the bit that makes money at the moment, that doesn't support the valuation. He said you've got to buy into the whole AI story. And at the moment, AI is the bit of SpaceX that's just burning through cash.
Yeah,
So
you make a really salient point though, Ian. I mean, there's been so much hype around this. We've not really seen an IPO like it. Even Saudi Aramco, it was nothing really like this SpaceX event. And I think there's going to be a lot of investors piling in because they will be scared of missing out on something, the old FOMO at work. And we really need to see over the next couple of months, few months even, about how the price might react. What is the market's fundamental valuation going into it? We're going to see the share price doing a lot of that, I suspect. And it might be sensible just to really stay out of the market and just observe from afar. I mean, personally, you think S&P trackers, NASDAQ trackers are going to be having to buy SpaceX shares. You might decide that you've got enough SpaceX exposure in your portfolio through trackers, stocks like Scottish Mortgage, without having to buy the stock itself. So again, there's a lot to think about, and whether or not you want to actually participate in the IPO, you've got to get your skates on because it's closing tonight and various platforms have different closing times. I know Hargreaves Lansdown are closing their offer just before midnight tonight. AJ Bell, I think, is closing at about 7 o'clock. Toro Trade or whatever they're called, they're closing about 9 p.m. So it's get onto your platform if you want to participate in this. Get onto your platform and find out all of the boxes you have to tick. But it might be sensible just to stand on the sidelines and watch from afar for the next few months.
yeah, and if SpaceX isn't your thing, then there's more space news this week, wasn't there, James, with Seraphim?
There was a trust that's not invested in SpaceX, curiously enough, but that shares in the trust that they moved higher after its largest holding, ICEYE, quadrupled its valuation in its latest financing round. Now, this is a
Right.
Finnish satellite constellation operator, and it supplies 7 European governments to date. So that was a real bump up for Seraphim. And then just in the consumer space, we've had another shocker from WH Smith today. So another profit warning, 100 million cash call to try and fuel the turnaround. I suppose investors would be worrying, are they throwing good money after bad if they participate in the retail piece? But that sort of pivot for WH Smith into a pure play travel retailer just hasn't been the runaway success that people hoped.
Oh, and is this because we think, geopolitics, people aren't traveling, that sort of thing?
Yeah, the impact on passenger numbers, the whole Middle East thing, and people cutting back per spend in their airport travel stores. So just a really, really, dire update today.
And you were also we were
So,
talking off air about the reaction to Fevertree results, which
Yeah,
seemed good.
it was a good reaction. Yeah, so they extended the buyback by another 30 million, which was something that we kind of previewed on the website. Market share gains in the States, Europe, and the UK, and the kind of the partnership with Molson Coors in the US seems to be making progress. So that gave them a bit of a bump.
the share price is a bit
Interesting.
soggy, James. Why do you think that was?
No, it wasn't too bad actually. The share price moved higher on the day. So yeah, not too bad. But perhaps if there is a concern, I always think it's competition. So you've got Schweppes lurking in the background.
Yeah.
AG Barr bought Fentimans, so that's like the Fentimans brand can call on a more muscular owner. That's the concern that I always look to.
Yeah. Steve, what are we looking forward to for the rest of the week? I know you got a couple of names on the radar.
Yeah, there's Oracle to look out for this evening. They're reporting, and anyone who's been following our content over the last 6 months or so knows it. Again, it's a big AI story, but it's really about their costs and their capex. Lots of the big hyperscalers have been spending billions and billions of pounds on boosting out data center capacity, but Oracle's really having to go to investors and to bondholders to raise lots of capital. And I think it's that capital allocation and the scale of its capital raising that is causing concern. So it's talking a very big growth picture like all the AI operators do, but it's how much is that expansion going to cost, and will there be a reasonable return on that investment over time? That's always going to be the big question, and it's certainly going to be something investors should be looking out for hints of. What are the returns on investment over time?
And you said that one's out tonight, yeah?
That's out tonight. We've got Adobe
Right.
tomorrow evening. There's a few other. James just talking about travel. Wizz Air due out later in the week as well, and they've been having a very turbulent time. And I think there was speculation. I picked up. I think one of the airline executives, I won't mention names, but was speculating they might not survive this current geopolitical fallout in the Middle East. So we'll wait and see. But their results could well be fairly dismal.
Oh dear. James, a couple of investment trusts for you on the radar.
Yeah, so we've got RTW Biotech AGM tomorrow. Lots of M&A in the sector, isn't there, Ian? I think
Yeah.
GSK did an acquisition yesterday that was in the International Biotech Trust portfolio. So there's a real boom. And do we have custodian property income as well?
We do. We've got final results, and we had
Yeah,
a podcast earlier, didn't we, with
we
Richard?
did with Richard Shepherd Cross, yeah, where he talked us through, why the closed-ended structure is ideal for property, why it's an interesting time to be buying property now. So do make sure you tune into that on the website.
Yeah, it's a good point you make, James, because I mean we've been quite busy with podcasts, so it's easy to lose track, and there's been quite a few. So definitely go and check out our podcast microsite on our website. They're all there. They're there to see whenever you want. You might find there's some stuff that you're not aware of that you might find really useful. So check it out.
Yeah, absolutely. And all I'll be looking out for tomorrow is Halma, which is a big one for me. Quality growth company. I mean, it's had a fantastic year, so it's going to have to do well. It's going to have to over deliver, if you like, and talk up 2027. I think if you're going to see more progress in the shares, particularly, say, because markets are choppy at the moment, and it's an easy one for people to just take profits if the results aren't quite up to scratch.
And it's really interesting. James and I spoke to Smithson's equity fund, Simon Bernard, not too long ago, and Halma was a core holding. I think as long as Smithson was around, it was in there from the beginning, and it's only recently started to sell down the stake, and largely that was because it just become too big. The Smithson wants to focus on more kind of mid-cap size companies, and Halma's become a real beast these days. But his other attitude was also valuation started to creep beyond their comfort levels. So it's something else to watch out for is what are the expectations, what is it delivering versus what is the valuation. valuation. It's such a brilliant operator. I think the company's absolutely top quality, but does that make it a good investment? That's the big question.
Yeah, that is the question, Steve. I mean, it's compounded earnings at double-digit rates for such a long time, and it's always commanded a premium valuation. It was cheap a couple of years ago. And hands up here, I actually own the stock and I bought it a few years ago, and I've got a very good return on it. So I am going to be watching that one particularly closely. That about wraps it up for us today then. If you've enjoyed this, please like, and if you haven't subscribed yet, do that on your favourite podcast channel. We'll catch you in a couple of days. Cheers.
See ya.
There you go.